Hey everyone, welcome back to the Daily Gold Podcast. Today we're speaking with Mickey Fulp, also known as the Mercenary Geologist. You can find him at mercenarygeologist.com. Mickey Fulp is a professional geologist who has decades of experience, 35 years to be exact, working all over the world. You can also find him being interviewed often on Fox News and CNBC, among many other places. Mickey, it's great to talk to you today. How are you?
I'm doing well, Jordan. How are you?
I'm doing fine. No, my first question, just because I know you're such an expert when it comes to the junior exploration sector. Right now, to me, I mean, with respect to gold, it seems that with gold prices now barely at $1,600 an ounce, it seems the market just doesn't care about most juniors and even developers. Are most of these deposits just not economic enough at the current gold price? What is your outlook, and is there any chance that we could see more exploration success in the next few years as opposed to the last five in regards to finding better, more economic deposits?
Part of the problem, Jordan, is that the major gold mining companies have not pleased their shareholders over this boom, which the commodities boom arguably started, especially with gold in mid 2003. What we've seen with the majors is a a growth philosophy, and I am more convinced that mining is not a growth industry, it's a value industry. So the majors have lowered their cutoff grades and they have had increasing capital expenditures, increasing operating costs. So uh, most of the mines are, I wouldn't say marginally economic, but not particularly economic in compelling sense at 1600 gold. A lot of that has to do with the the deposits that have been found and mined generally are very low grade, and the gold miners have gone to a an economic model of bulk mining and economy of scale, and that has not worked out very well for them. So, regarding the juniors, then the juniors have explored deposits that historically are recycled and were not economic in the past. So shy of new discoveries, and there have been some significant new discoveries. A lot of what the juniors have focused on have been deposits that are marginal, and the majors are just not interested in those marginal deposits now. The juniors have, as they always have historically done, have tended to overpromise and under deliver, and add all that up, and commodities being range bound for the last year or longer, it has resulted, in my opinion, in disinterest by the speculating part of the market, which the juniors attract.
Right now, in regards to these high margin deposits that everyone is talking about, everyone wants to see these nowadays. I mean, given the amount of money that's been spent in the last 10 years and just the lack of success, is there any hope in the next 3 or 5 years that perhaps we can find more of these high margin deposits? And what should investors and speculators look for, if anything, to try and uncover these potential huge winners? Or is it just a total gamble?
Well, in some ways, this entire business is a gamble. If you make good speculative moves, if you do your due diligence, you can skew the odds in your favor. Regarding the outlook, there's been a lot of money thrown at this business over the last 10 years, and one thing that generally is encouraging to me, there's still plenty of companies with plenty of money in the bank. Financings are very difficult right now, but if you're well positioned, there's still money for drill holes in the ground and boot leather and drillings, what discover deposits. There is also a lag time between when money is raised, money is spent, and drill hole discoveries are made. We've seen some a couple of very nice discoveries over the last 6 to 9 months in the gold sector and the copper sector, and those stocks have done quite well. It's always been about margin, and from the earliest days as in my career as a practicing economic geologist, I can remember when we got our first Apple II computer, and for the first time, we had the ability to do interactive financial modeling and on a computer, and it was very much put into my brain at that time by the people that were my mentors that you need to be in the lowest quartile of operating costs, and that's a high margin deposit. So you want margins to be something on 40 to 70% over from product prices to your operating costs. So, and that's always been true. The difficulty we've had is that we found all the easy stuff. So it gets harder and harder to find good deposits. But at the same time, technology has enabled us to mine lower and lower grades. So as a practicing economic geologist, you have to be kind of an internal optimist. So I'm generally bullish on the fact that we will continue to make good discoveries. They all have always been few and far between. Think about it. The lowest quartile means that there are 3 people out there producing the same metal at higher prices than you are. So, but it's incumbent on us as speculators to choose companies that have good chances, good models for exploration to have a chance to find high margin deposits.
Mickey, I want to get to uranium, but first let me ask another big picture question, which is, you really have the experience in this industry that few others have. And I'm guessing that's probably why you're a contrarian, given the cyclical nature of the commodity sector. It's been a few years since commodities have been in favor, and sentiment is now quite bearish. I'll just provide an anecdote. The Bank of America Merrill Lynch fund manager survey, which comes out every month, the one for March showed that fund managers are actually, in terms of their commodity positions, are actually weighted at their second lowest position in the last 4 years. Now, broadly speaking, is now a time that contrarians should take a serious look at the commodity sector and some of the specific commodities?
Oh, absolutely. As contrarians, that's incumbent on us to take a look at things that are out of favor. The Bank of America, is that, yeah. So what do those guys know about commodities? It's their performance over the last 10 or 15 years with the idea you had to be in mutual funds and stay in them. That hasn't worked out very well for people that are on the verge of retiring right now. So I don't really pay attention to the mainstream fund managers' takes on commodities. The commodity sector prices remain high. They've become quite range bound, but who doesn't like oil at $90 a barrel and copper at $3.50 and gold at $1,600? Those are all good prices that good deposits will continue to make money. We still have well over 2 billion people in the world that live in emerging market countries. And by emerging, I mean they are emerging now, and middle class is being built. So from that point of view, commodities demand, I think, is going to remain strong. And the fact remains that we're not finding enough good deposits to replace what we mine every year. So from that point of view, I remain a long-term secular bull on generally all commodities.
Right, and yeah, just one little comment I'll add in there is presently the dollar's been pretty strong. So if you account for the dollar strength, I mean, commodities are even stronger in comparison to the other currencies, fairly strong in general. So to me, it seems like we're starting to see a little more strength. It's just that the dollar strength is kind of a problem. Do you have a thought on that, Mickey?
Well, the dollar has been strong and commodities have been flat. So that tells you that, at least in dollar terms, the true value of commodities are rising, right? So it's all about relativity, Jordan.
Exactly. Now let's get into some specifics, Mickey. I know you've been bullish on uranium, and we've seen a nice recovery in the shares since the last time we spoke, which I believe was November, December. Is this the year that we finally see uranium prices move higher, or is that more likely in 2014? What do you think?
Well, my gut feeling is that we're still in for a period of low uranium prices, but it appears to me that the piper has to be paid, and that's going to happen in the midterm. We've got 24 million pounds of uranium coming off the market with the sunset of the Russian U.S. Megatons megawatts program. Where's the uranium going to come from? With 66 nuclear reactors under construction right now and a supply deficit that ranges, last year was about 13%, but that's a post Fukushima hangover. But we continue to have a mine supply deficit, and so I remain a mid to long term secular bull in uranium. My gut feeling, I guess, is that we probably won't see a significant rebound in the spot price in 2013. I generally hop on board these sorts of ideas sooner, sometimes significantly sooner than they tend to happen, but that's a contrarian nature, and as a contrarian, patience is a real virtue.
Okay, Mickey, what other commodities or specific situations are you looking at right now that intrigue you aside from uranium?
Well, I remain a secular bull in copper. I'm giving a talk, have been giving a talk lately called The Bull Market Fundamentals of Copper and Uranium. So copper's always on my list. But I tell you the truth, Jordan, I'm all over the place in commodities. My latest stock pick was a tungsten play in Portugal. I cover a prospect generator, a couple of gold explorers. I cover a copper company, a uranium company. I'm invested in what I think is the best graphite company on the market. So it really becomes commodities that I like, and then find the company that fits the criteria that I need to be a speculator in that sector.
Mickey, maybe you can just take a minute and talk about maybe a couple of the companies you own and specifically what the criteria is that you like about these companies.
Okay. One of my favorite companies right now has to be Curus Resources. That's CUV on the Toronto Big Board, and it is a near-term developer of an ISR, in situ recovery copper project in southeast Arizona. One permit away. We expect that permit to come about very soon, and construction starts. So I would encourage listeners to take a look at Curus. Another idea right now would be, say, Brazil Resources Inc., a fairly new company, explorers, developer of gold deposits in Brazil. One thing is, look at the history of this company, and it is trading in its average range, so it's retained its market capitalization despite the junior resource sector. A prospect generator that I'm involved with is trading at 7 cents right now. It's called Arupa Minerals, and they have a joint venture partner in Portugal with Antofagasta Minerals, a mid-tier copper company. And I think it's just a matter of time before a significant discovery is made in the Iberian Pyrite Belt by the Antofagasta Avrupa JV. And this stock's trading at quite a discount right now, very tightly held, with a market cap of about $2.5 million. I'll have an update on that company coming out in the near term.
Okay, Mickey. Now, anything else you want to comment on that we haven't covered here already?
Well, this is a buying opportunity. You have to have some guts to come in. But at down times like this when a market is out of favor, but it's like shopping at Walmart. We all, or at least Americans, we love going shopping at Walmart when they're having sales, and people should it seems like people want stocks when everybody else wants them, and you wouldn't go to Walmart if they raise their prices and say, okay, we're selling things higher for the next year. It would drive everybody from Walmart. So I'm always confused why people don't buy stocks on sale. They want to buy them when they're on a roll and everybody else wants them. Let's leave it with that. Let's buy our stocks like we're going shopping at Walmart.
Absolutely. Now, Mickey, before I let you go, why don't you tell all of our listeners about your newsletter and how they can subscribe?
Okay, I run a free subscription newsletter. I run a sponsor model in which companies that I own significant shareholdings in pay a fee to sponsor my website. I can be reached found at mercenarygeologist.com. All you have to do is give me a name and an email address, and you'll get something from me at least every Sunday. And we do insist that you give us a correct email address, but if you want to give us an anonymous, be anonymous, give us an AKA, that's good too. And this interview will be posted on our 24/7 internet streaming radio station, mercenarygeologist.fm. And if you so desire, you can follow my Twitter feed at Mercenary Geologist and join nearly 27,000 other followers on my tweets.
Okay, well, everyone listening, go to mercenarygeologist.com and sign up for the newsletter because it's free. There's no reason not to sign up.
It's a great price, isn't it?
Can't beat it. Can't beat it. On that note, Mickey, thanks so much for coming on today. It's great to talk with you, and look forward to speaking with you again the next month or so.
Well, thanks for having me, Jordan. It's always fun to talk to you, and I welcome doing it again.